Welcome back. You're still tuned into Halftime Report on CNBC TV 18. Well, it's been a strong debut for the market-leading consumer pharmaceutical maker, Mankind Pharma. They have a lot of brands which have a strong brand recognition within their consumer healthcare space. The stock has listed with an over 20% premium to its issue price, which stood at around 1,080 odd rupees. We have with us Ramesh Juneja, who's the chairman of Mankind Pharma, and Rajiv Juneja, who's the vice chairman and MD of the company, joining in to discuss the company and what the plans might look like going forward. Mr. Ramesh Juneja, I'm going to start with you, considering that we haven't yet spoken to you throughout the entire IPO process. Now that the company is listed, if you could share some kind of guidance in terms of what we can expect in numbers going forward. You've done a 15% revenue CAGR in the past 2 years. What is growth looking like for the company? Can you replicate that kind of growth going forward?
And we will continue working on that. And we're launching new products, new divisions within the Mankind. And of course, the natural growth of Indian pharmaceutical is always there. And by launching new products, new divisions, and and some of our divisions which are already showing 20% growth, 30% growth, they will continue increasing our sales. That's what we can ensure that we will grow.
Okay. All right. Mr. Ramesh Juneja, before we open the floor to Mr. Rajiv Juneja in terms of questions, one of the questions that I did pose to Mr. Rajiv Juneja when he had joined us earlier was this concern that there's a lot of family involvement at the top. There's not much professional outside of the family involvement at the top management level. This is something which even, analysts have brought up. Is that something that y'all would be considering in terms of a change? Have y'all already considered it? Is it in the works?
It's in the work. We are continuously working on that. And gradually we are putting professionals, experts as managers in the key positions. So ultimately in coming 3, 4, 5 years, the family load would be less on the management side. That's what we are doing.
Okay, that's great to hear. Mr. Juneja, Ramesh Juneja, congratulations. By the way, you have come a very long way from starting the company way back, and now, of course, seeing such a fabulous listing. So congratulations to you, to your family, and to the entire team at Mankind Pharma. I hope of course, you've made a lot of people proud. I hope you made shareholders proud as well now from here on. But Rajiv, I wanted your thoughts. My colleague was asking about... my colleague was asking you about the growth plans, and it's been a spectacular growth that the company has seen in the past couple of years, about 15-20%. Just trying to understand what would the levers be, and now that you're listed, perhaps you'll be able to give us a little more clarity. What would the growth levers be over the next couple of years?
When you look at Mankind from outside, it is one company, but inside, Mankind has 28 divisions. And out of those 28 divisions, 18 are just new. They're just new. 4 years back, they have been launched during COVID time. And if you see, the average age of these divisions are 2 years only. And all are focused towards chronic side. So whatever new avatar of Mankind you are seeing last couple of years, it is because of that we have evolved a lot. And when you mentioned about that professionalization, madam, from last 3 months, we are traveling. Everything is being given to the right professionals. We are in a transition mode. Everything happens at its own pace. And if you ask me what basically is a thought process in Mankind, we want to be the most admired company. We want to institutionalize Mankind Pharma. And whatever faith investors, especially small investors, bestowed upon us, we feel really humbled. We feel very responsible. We feel that can we deliver, can we come up to their expectations? Can they have the same kind of a faith in Mankind after 5 years and 10 years? These are thoughts crossing my mind right now. As you all,
since you are
my brother, whole management is thinking like that.
Sure. Since both of you have spoken about professionalization of the company, have you been able to crystallize anything? I mean, any finer details that you can give us about any top management changes that you'd want to do perhaps over the next 12 to 18 months?
See, I mean, these are gradual things. In last 5 years' time, we have just professionalized everything. Every department is being controlled by right professional. We are hand holding. And what's wrong in if some kind of involvement of a family is there? Because whenever any kind of hurdles are there, we are always there to hand hold them, clear the roadblocks. When family is involved a bit, I mean, that really shows how passionately they are involved. But there's no doubt that we are on the path of professionalizing it. But gradually, nothing happens in 12 months' time. This man
Right,
has
we
been
understand
built in the last
that.
27 years. Whatever is there in front of you is a
Right.
result of that 27 years. It's not a magic.
We understand that the magic of compounding is what's most important, the time that it takes. Just a couple of questions I had. One was on the payback period that would be for Panacea Bio acquisition. 1,800 crores is what you paid for it. By when do you expect to recover the entire amount? And, what's the kind of growth that you foresee there? And secondly, I track the consumer space. A lot of people are calling your company as the consumer, the FMCG pharmaceutical business. You have 3 market-leading brands. What other brands do you see as the potential of being power brands for you all?
So let me answer your first question. When we acquired Panacea, there were many reasons for acquisition of a Panacea. Number one, the gross margins of Panaceas were better. And once they're slowly and gradually coming to our own factories, they will further increase. One. The second basically is what? The transplant business is really niche one. They have offered us patented brand, Sitcom. They have offered us chronic side brand, Glycid. Everything has fit wonderfully well in Mankind. Whenever any kind of acquisition is there, what company is supposed to see? Whether these products and this company will enhance the value of present organization or not. In that way, it is doing very, very good. It's just 1 year. Just 1 year. Wait for a few more quarters, you'll see fantastic things going forward. As far as this consumer side is concerned, in consumer side, whenever you launch a product from scratch, chances of failure are very, very high. We are quite successful in building brand like Manforce, Praga News, Unwanted, and now our focus is towards Gasofast. In consumer side, please understand, it's not number of products, it's always size of the product, which really matters. Health OK
Correct.
is recently come from our prescription to this side. We feel this can become quite big one. And I've told you already that Nimulid, their brand from Panacea, will come as a Nimulid Diclo as a lubrificant to fight against the competitors like Volani and Voltron kind of products. So we are quite well set.
Sure.
For the
Mr.
next,
Janeja,
phase of
Mr. Rajiv
growth.
Janeja, I'm just, for paucity of time, I'm just going to fit in a couple of more questions. That's on your consumer health business. But the street also now wants to know what's going to take place with the margins, because you were impacted by higher input costs as of 9 months, and your margins came down to around 22 to 23 odd percent. The street is anticipating that you'll close 23 with, an exit run rate of similar levels. Where is the recovery? Where do you see margins going to in FY24? Do you expect it to go back to those 27, 28% levels? And what is a sustainable run rate for the company now?
I mean, if you look at the history, it was always 25 to 27%. Still, we are under the obligation of certain regulations. So let the results really come in front of you in next couple of days, annual, quarterly. Then we'll explain you about that. But I can assure you one thing, that we are very well concerned about these things. And fortunately, whatever API price were increased, they have settled down. And we definitely see, going forward, good things happening in every sense, whether it's a growth, whether it's a growth on margins or as whole growth.
Okay. All right. Mr. Ramesh Janeja, we'll just end the conversation by asking you about a larger picture for Mankind. Currently, your chronic sales are around 34% of sales of your total business, and the average for the industry is 38 odd percent or thereabouts. Tell us, where would you see chronic rise to? And do you think that competition is a big challenge for you, considering that you're trying to break through the tier 1 markets, you're trying to break through the chronic segment, which is dominated by the perception of quality and high price, and by by the big MNCs in India, as well as the Suns and the Ciplas?
So far as the chronic segment is concerned, that we are already at 33% of the total market, otherwise 38%. We are launching a few new more products, new molecules are launching very shortly, and you will find that if not 38%, we reach 38%, we will grow to 35 to 36% in this year. Number one. And what was your next last question before that?
Do you think that competition is a big deterrent for Mankind, considering that there is a perception of lower price equals to maybe lower quality, and you're breaking through a competitive market of the tier 1 segment where there is a dominance by bigger companies such as the Suns, the Ciplas, the MNCs?
That does not exist anymore. The low price means quality is low. It doesn't exist, and nobody buys. Amongst medical profession, I don't think that anybody buys these things, because the quality, we are there in the market for 27 years, and most of the products are very economically priced. And I believe that we have proved it. We have proved in the market that we are absolutely quality products. We give quality products at affordable price, and we will continue doing it. We will continue doing it. And
yes,
you will see that there will be growth in the market when we are very, if you have quality, your product is backed with quality, and you need not to be afraid.
Absolutely, absolutely.
Because competition is always there.
That's true. Ramesh and Rajiv, thank you so much for stopping by. Once again, all the best. Congratulations on a stellar listing. You've definitely come a long way. You started the company way back in 1995 with a sum of 50 lakh rupees between yourselves, and now you've grown this business into one of the biggest IPOs that we've seen this year. So once again, congratulations to both of you, and thanks for speaking to CNBC TV 18.
Thank you.
Thank you very much.
Thank you.
Thank you.
All right, that's the big listing of the day, and of course the big headline as well. Continues to charge ahead, Mankind Pharma up 25%. Let's